Hello, everyone. Welcome to our webinar today. My name is Jesse Rowe. I'm the Executive Director of the Alberta Energy Efficiency Alliance. I have Alex Hill with Dunsky Energy and Climate Advisors with me. We're going to be taking you through some of the research that we've done recently when it comes to efficiency financing for new homes. We've got quite a contingent across the country here today, so it's great to see. And now would be a great time for me to also acknowledge the land that we're on today across this wonderful country. It's been stewarded by the first peoples of this country of this land since time immemorial. So definitely want to make sure we're recognizing that work, and certainly I value the ability to live, work, and play in such a beautiful place that's been stewarded for generations before me. With the Alberta Energy Efficiency Alliance, we're an industry association. We've got quite a diverse membership here in the province. We're working to advance energy efficiency, a lot of it through policy engagement. But we do also have some programming when it comes to engaging contractors in deep retrofit economy. That's a project that is funded through NRCan, Deep Retrofit Accelerator, and I know there's a number of those happening across the country. So we're involved in one that's focused here in Alberta. As far as this project is concerned, I definitely want to recognize all of the funders that we've gotten for it. The Alberta Real Estate Foundation was our first funder in, so thank you very much for helping us kick off this project. Alberta Eco Trust was close after them. That allowed us to do some exploration with home builders and with municipalities in the province around this idea. And then after we did some initial exploration, we actually got some additional funding from the Green Municipal Fund and Build Alberta to expand our work, and we were able to bring the Dunsky team on board to help us complete the report that we're going to be talking about today. So thanks very much to all of our partners in the work. And as I introduce myself, I'm Executive Director of the Alberta Energy Efficiency Alliance. I've got Alex Hill here with me as well. So Alex, maybe you can introduce yourself and your organization a little bit before we get into the report.
Great, thank you, Jesse, and good afternoon, good morning, everybody. My name is Alex Hill. I'm a partner here at Dunsky. We've been involved in clean energy financing initiative design and evaluation for pretty much the whole of our 20 years of existence, designing strategies for both the commercial and residential markets, including work for the FCM and Canada Infrastructure Bank, as well as work in the United States for New York Green Bank and California as well. And it was a real pleasure to conduct this work for the Energy Efficiency Alliance in Alberta with Jesse. And credit really should go to my colleagues, Jasmine Bradet and Felix Witten, who were the two primary Dunsky team members who did the work on our side.
Great, thanks, Alex. Before we get into the content, I should let people know that we're going to encourage you to do questions throughout the presentation into the chat. There's also an opportunity to provide comments or thoughts on the work as we go, and we can create a bit of a conversation in there. And Jasmine will be monitoring the chat, and we'll be bringing forward questions either during the presentation or at the end. We're not going to be taking the full hour today for the presentation, so there will be an opportunity for certainly some questions and some dialogue. And the whole purpose of this work is really to engage with yourselves and others in the conversation, because I'll let you know right at the start that the end of this presentation isn't going to come with a whole bunch of answers in terms of exactly what we should be doing when it comes to financing for high efficiency new homes. It's going to come forward with some ideas, but it's certainly going to need a lot of work and input and contributions from others to be able to move those ideas forward. So that's why we want to make sure that this conversation can be this can be a conversation starter in many ways. So we'll go through in today's presentation. I'll be providing a little bit of an introduction to the work. Alex will be going through the assessment that we undertook in terms of different options that we could be using to finance efficiency upgrades in new construction and new homes in particular. And then I'll wrap us up with a little bit of ideas on potential paths forward. I already give you one of those ideas. Your involvement is potentially one of those paths forward. So please keep that in mind as we go through. And we'll talk about some next steps and how you can engage with us on a conversation beyond just this webinar here today. All right. When it comes to the work and the background for this work, in our work in Alberta, and I think this is similar to other jurisdictions, we certainly see opportunities when it comes to the energy efficiency side of things. Governments are talking about reducing emissions. We've got public opinion polls that talk about the value that people are placing on reducing emissions and having higher efficiency or higher performance homes. And we do see industry taking action when it comes to builders, not only in the province, but across the country. And so those are all good things, but certainly those of us working in this space recognize that not all homes being built these days are high efficiency homes. We've got some work to do. In Alberta right now, we're currently at tier 1 when it comes to the provincial building codes. I know across the country there's work happening and we're at different places when it comes to adopting those codes, but nobody's really all the way to the end goal yet of really ultra high efficiency homes as the standard, the minimum. So there's still work to be done. We see that there are incentive and financing programs targeted at retrofits for existing homes, not as much certainly on the new home side of it. And so that's why in our organization, what we try to do is we try to look for opportunities to add value to what's already happening. So lots of work happening on the existing home retrofit side of things. For us, one of the ideas was, well, we've got a PACE program, or Clean Energy Improvement Program here in the province that's focusing on financing retrofits for existing homes through property taxes. Is there an opportunity to potentially add in an opportunity for new homes to also use that mechanism? That's really what drove this work, is trying to identify gaps and see what we could do to potentially fill those gaps. So that's really where the impetus for the work came about. When it comes to the last point there, we certainly see consumer demand for high efficiency, but a lot of times, anecdotally, we'll hear that, well, yes, it might be on the list, but it's not really always at the top of the list. And sometimes it's competing for limited mortgage room when it comes to other things like cosmetic upgrades or size of the property, that sort of things. And so it might not necessarily make the cut when it comes to all of the features that people add into new homes. So how could financing potentially play a role in overcoming some of those barriers that we see to those efficiency upgrades that I think all of us on the call probably are working towards in some way or another? Another bit of context for us, certainly not just in Alberta, but across the country. There's a growing demand for housing. That's happening not only at the single family side of things, but the multifamily as well. Alberta, on a per capita basis, certainly a lot of growth happening, but again, this is something that can be applied into lots of different jurisdictions. One of the things I'll note is while we're focusing on housing for this slide, in this project, we focused in on single family homes. And the reason for that is because we do see that there's obviously a need for increasing efficiency levels in all types of housing and non-residential buildings as well. We thought, well, let's try and simplify our work a little bit. And, with the ownership structures for multifamily housing being fairly diverse, we thought, well, let's start this work focused on single family homes that are owner occupied as just a starting point to see if we can find some opportunities here. And then obviously, there's an interest in expanding the work beyond just single family homes. Could go to multifamily, could go to a commercial sector or non-residential buildings as well. But that's just where we focused on for this particular project, is the smaller homes to begin with. And when it comes to opportunities in single family homes, we were looking at different opportunities when it comes to different energy efficiency upgrades that can occur. We did quantify for Alberta, some of the costs and benefits when it comes to going to different tiers. So we used the building code and the tiers in the building code as kind of benchmarks that we looked at. Obviously, as you go up the tiers, there's greater energy benefits. When you look at the chart on the right-hand side, the greenhouse gas reductions that can come from having new construction built to a higher efficiency standard. Those are GHG emissions that occur over the entire life of those buildings. And so we can see on the right-hand side, business as usual, if we continue at the current code levels, what happens if all new builds would go to tier 3, tier 4, tier 5. That's just an example of the emission reductions that can be happening at a provincial level when it comes to single family homes. going to look at those opportunities, but obviously you want to be mindful of the costs, and that's the chart on the left-hand side, which is, with tier 3, there's an incremental increase, fairly modest when it comes to the total cost of the home, but as you go up to tier 4 and tier 5, those costs are certainly going to be more noticeable from a homeowner perspective, and that's one of the barriers that we're trying to overcome with this research when we look at opportunities to finance high efficiency upgrades within new homes. Other benefits, certainly we recognize that there is an opportunity to save money on monthly utility bills and reducing exposure to price volatility, which we did see quite significantly within the electricity system in Alberta over the last couple of years. That's smoothed out a bit now, but certainly with the market that we've got here, volatility is a component of it. And so this is an opportunity to help manage some of that volatility. Resilience and comfort benefits. I think the people on this call probably know this stuff pretty well. I'm assuming we all have an interest in seeing more efficient buildings out there. So I won't go into them in too much detail, but we see resilience, comforts benefits. There's benefits when it comes to resale value. Obviously, the greenhouse gas emissions benefits that I said on the previous slide. We do also recognize that there's benefits when it comes to not only job creation and the jobs that are needed to build these high efficiency homes, but also the economic benefits that come from having more efficient building stock, and not just in the residential sector, but if we look at commercial and even industrial facilities, our work spans all sectors. I mean, this is about managing cost of living. It's also about managing cost of doing business, and our ability to attract and retain business in the province is something that we talk about a lot in our policy engagement with the provincial government. My last slide on this, and then I'm going to pass it over to Alex to go into detail on the analysis that we undertook. So when it came to the first set of engagement that we did with stakeholders, it was really focusing on builders and municipalities. We expanded that in this expanded project to include financial institutions as well. And one of the things that we kept hearing over and over again from all of these groups is that they did see an opportunity for financing to help overcome the barriers to high efficiency new construction, or getting those energy efficiency upgrades into new homes. So we saw a lot of interest early on in the project in this concept of this opportunity that it could unlock. We also heard from them that simplicity and accessibility are key when it comes to selling new homes. It's a very well-oiled machine that needs to be very responsive to customer interests, and anything we do on financing needs to fit within that. So we do need to make sure that it's not overly complicated, but that it fits in with the current home buying process. We did hear as we went through this that financing these efficiency upgrades was easy. We see a lot more of it, and so is there an opportunity for other levels of government, maybe at the provincial or federal levels, to play a role in helping make it more attractive to do a financing of efficiency upgrade on new construction? That's kind of a parallel to what we see on the retrofit side, where there are governments playing a role in helping make retrofits more attractive. So when we think about new construction, is there a role for other governments to play in making that much more attractive in terms of efficiency upgrades as well? And then we did want to make sure that we were not just sugarcoating this opportunity, but looking at any challenges that there might be in bringing efficiency financing into new construction. And certainly, and Alex will go through this in more detail, but certainly we're hearing from people, and what's included in the results that Alex will talk about is things like administrative capacity, say for a municipal program. Data and information really drives things that happens not just in municipal programs, but in financial institutions as well. And so do we have the data to be able to back up some of these ideas that we might have around different financing offerings? Training capacity building within the industry, not just on the home building side, but even when it comes to valuing energy efficiency upgrades within new homes. And again, these are all things that Alex will go into in more detail. But with this slide, I really wanted to highlight the fact that we had quite an extensive stakeholder engagement process early in the process, in the middle of our project, and right at the end to review the results that we're going to be sharing with you today. And so this is just a skim of some of the feedback that we've received. But again, Alex will take you into a little bit more detail with regard to those results. And I'll pass it over to you, Alex.
Great, thank you, Jesse. Let me just make sure I've got the right screen open. So I'll cover our, we look at different financing products that could help homeowners to make high efficiency new construction homes more accessible to them. And I mean, the question really comes down to, given the rapid increase in housing prices and, construction and land prices in Canada over the last couple of decades, many homeowners are, absolutely at their borrowing limits when it comes time to purchase a home. And as Jesse pointed out as well, they have a whole range of priorities in purchasing a home, the size of the home, number of bedrooms, location, and so forth. And so, putting the energy efficiency, the incremental cost of energy efficiency, which could be, I think we saw in the order of, up to 10 to 20% of the overall home value to get a high performance home, can be a real challenge. And it may require, going after an additional source of financing in addition to what their mortgage limits might be under the conventional stress test. In particular, if you're have less than the 20% down payment and are required to have an insured mortgage, which could really limit your options. So we looked at three different financing mechanisms that could be appropriate for providing that additional borrowing room and enabling homeowners to purchase a higher cost, high efficiency home that ideally pays back much of that additional cost through the energy savings and the quality of the home over time. We initially started looking at the PACE financing option, otherwise known as local improvement charge-based financing, which is available in a number of provinces across Canada, in particular in Alberta. We'll talk about the program in Alberta specifically in a moment. And so this type of financing works, and it's currently used primarily for existing homes. I'm not aware of any program currently operating that is doing this for new construction. But the municipality would finance the additional cost for the energy upgrades in the new home to the homeowner in return by putting a special charge on the tax bill. And this gets paid back over an extended period. You can see these going 10, 15, 20 years out to match the period of repayment from some of these measures. Things like envelope improvements can pay back for many, many years into the future, and it allows that financing to tailor to that long payback period. And in addition, the financing actually is attached to the property and not the homeowner as personal debt themselves. And this has some advantages in that it can be transferable at the time of sale if that's desirable. Oh, sorry, Jesse, can we go back? I haven't dealt with the high level for the green mortgages yet. And I'll get more in detail on the base in a moment. So it can be transferable at the time of sale, or it can be cleared at the time of sale. And also if there is ever a default or a foreclosure, then only the portion that is outstanding is really at risk, and the rest of it can be transferred to the next owner. The other option we looked at are green mortgages, which have the benefit of financing the entire home. So they integrate the incremental costs of the upgrades into the overall mortgage. And in many cases, or there aren't that many examples, but in the cases they may offer preferential terms and also consider the energy savings to expand the maximum mortgage value because they recognize that the financial burden of the home is reduced on the energy payment side for the homeowner. And this would just be repaid through your standard mortgage repayments over the time that you own the home and cleared at the time of sale. And then the last option we looked at are personal loans that could be taken in conjunction with the purchase of the home. These would typically be unsecured, so they wouldn't be attached to the property. They can cover the incremental costs. And we'll talk about some examples that exist in the market right now for existing homes. We considered utility on bill financing, which is a subject of discussion across the country. However, given Alberta's unregulated utilities energy retailer market and just the number of utilities involved in that space, it doesn't seem like a particularly viable option in the province of Alberta because of just the level of distribution within that market. However, in places where you have a single utility that services most of the customers, there could be options there as well. We just didn't dig that deep because it wasn't appropriate for the market in Alberta. So let's talk a bit about the PACE financing specifically. So currently there are 16 municipalities that are offering PACE financing under the Clean Energy Improvement Program that is administered by Alberta municipalities, a not-for-profit in the province. And the way this works is that there's a capital provider that provides the capital to the municipality, who then on lends it through the third-party administrator to the homeowner, the home purchaser. And this helps, because the municipality is the lender to the homeowner, they can leverage their status as a preferred borrower to obtain low-cost capital, either through sources like the Federation of Canadian Municipalities that currently runs a program to provide capital, or through other financial institution lenders, or even municipal bonds. And the idea is there's an opportunity to pass along that low-cost financing to homeowners that they can access themselves. Currently, this is really only offered for existing homes, but we did look into the option for expanding it to new homes. In the case of Alberta, there didn't appear that there was any legislative or regulatory restriction on that, but it would have to be agreed to within the program, and the individual municipalities would have to expand the program definition to include that, and there would be a number of complexities involved with it. Some of the challenges that could present themselves are, placing the lien on a brand new home, possibly even prior to the purchase, and also ensuring that it's a fair partitioning of the incremental cost between the base construction and the incremental costs. But through our discussion with stakeholders, they typically felt that these were solvable problems, if there was a municipality who wanted to go ahead with this model. So I'll go now to the green mortgages. So these would help the homeowner to purchase the energy efficiency home by offering preferential lending terms. I think really there are two key aspects of this. One would be, as I noted, recognizing the value of the energy savings and expanding the amount of mortgage available to the homeowner to incorporate those efficiency improvements and the incremental costs. And the other can be also a somewhat reduced interest rate for those homes, perhaps recognizing that a lower risk. Energy efficient homes often are highly correlated with higher quality homes, and so there could be a somewhat lowered borrowing risk. And the third way that they can improve the terms is by extending the amortization period to allow for lower payments on a larger debt, which may fit better with the homeowner's financial position. The CMHC also offers a mortgage insurance premium rebate of up to 25% through its Eco Plus program, which can be combined with as part of a green mortgage to help to homes that have an energy efficiency certificate, and as part of CMHC's greenhouse gas strategy itself. But there are two specific products that we identified in the market right now. Desjardins Sustainable Home Program in Quebec, which leverages the Renault Climat program by the province, and the Royal Bank of Canada's Green Home Mortgage, both of which offer some combination of various preferential terms that enable a green mortgage. And then I'll go to the personal loans. So personal loans are unsecured products that are borrowed by the homeowner. They can represent a higher risk because they are not attached to the home as collateral, and so they're based on the homeowner's credit position, their credit rating. There's a number of existing personal loan products that are available: RBC, Scotiabank, Van City, and even the federal government's Canada Greener Homes Loan Program, administered through the CMHC, are all options. These are all for existing homes, so they would have to be adapted or adjusted to be offered for the new home construction. But essentially, it would be working towards the same ends and with the same general risk profile that they're dealing with in the existing home market. So what we looked at each of these three products, and we wanted to do a comparison to really determine, how good a fit is each of these for different markets. And we really looked at two key indicators. So the first is, to what degree does each of these products address the homeowner's financial barriers? We talked about the question of the maximum amount they can borrow, but also there's the question of what their monthly payments would be, whether that fits their income and their debt profile. And how is this going to motivate the homeowner or enable the homeowner to purchase a home that has a higher energy efficiency performance? And then the second question is how scalable or how easy to implement are these programs, given that they have to be administered and delivered by a financial institution or the municipality or even a local government or other levels of governments in the case of the CMHC loans. So we looked at the degree that the capital can be accessed, so capitalization, the administrative complexity, what kind of resources be required, and how would you drive uptake and generate interest in this program from a marketing perspective. So in the next slide, we have a series of sort of key factors related to each of these indicators. So for the PACE loan, it definitely, the examples are providing favorable terms. There were some of the initial LIC programs funded into the FCM were offering no interest loans. Now they're offering more competitive loan terms with existing mortgage rates, somewhat lower in many cases, blending private and public capital to get lower rates, but typically lower interest rates than the market. They also have relaxed underwriting. They're easier to access. In the case of the existing home programs, they would look to get your tax bill payment history rather than a credit score per se. And this is largely because of they're highly secure for the lender with minimal risk because of the repayment is attached to the property itself. It would be separate from the mortgage, which means that it wouldn't, if it is structured properly, it wouldn't impact the homeowner's borrowing capacity for the core mortgage and could be layered on top. And again, transferable on sale or can be cleared at sale, depending on the preference of the homeowner and the person that they would be selling to. There are some drawbacks and some challenges with the PACE model. So one of the key ones is so far we haven't seen PACE be eligible for insured mortgages. And this is because the CMHC won't cover losses that are related to a PACE lien on an insured mortgage, which causes mortgage lenders, if they are put in a position to provide consent to go ahead with this, would typically not consent to having an insured mortgage with a PACE lien attached to it. Given that about a third of mortgages in Canada are currently insured mortgages, meaning the homeowner had less than the ideal 20% down payment, that removes a pretty significant portion of the market, and perhaps actually the portion of the market that would be most benefiting from having an additional lending option on top of what their mortgage limits are. So that does pose somewhat of a challenge. As far as the ease of implementation goes, there are the 16 existing programs in Alberta, as well as there are programs in British Columbia, in Ontario, Nova Scotia. There's been a pilot in Quebec. I want to make sure I don't miss any problems. Saskatchewan as well. And I think that covers all the provinces that have had PACE programs up to date. So there are existing networks of these programs functioning that could be leveraged and expanded to new home construction. They would align with municipal climate objectives, and they're structured in a way that can access the private capital. Again, there are challenges of the mortgage lender buy-in and concerns about the priority lien status of the PACE lending, which may limit this, particularly for a new home where the PACE lien and the mortgage would be secured at the same time. And many of the PACE programs that are operating are doing a wonderful job, but are facing themselves resource constraints to deliver. And so expanding their mandate could be a challenge itself. On the green mortgage side, again, I think one of the key benefits here is it's working with a product that's already well understood, which is the core mortgage, and expanding it to account for the improved performance of the high efficiency home. So you're working with a single financial product that's well understood. It has competitive loan terms. They start at base rates with typical mortgages, and in some cases even offer preferential mortgage terms. And they can have somewhat flexible underwriting, extending the amortization period and the overall lending limit. There can be a limit on the marketing size as a downside to this product, just mostly from the perspective of not many financial institutions are currently offering green mortgages right now. And in reality, the interest rate reductions can only go so far because it still is a mortgage product and it works within the limits of what financial institutions can do and still maintain their own business case. As far as the implementation and scaling goes, again, it's financial institutions who are already offering mortgages and have access to capital sources. So there's lots of opportunity for scaling. And it does fit with their ESG and net zero commitments, and also more and more focus on financed emissions within the financial sector. And residential mortgages are a significant portion of those financed emissions. So this is an opportunity to go after those targets. Again, limited products and market coordination exist, and there isn't that much market awareness right now. So those would be a couple of the barriers to overcome. And finally, for the personal loans, so what we see for the personal loans, they are simple and flexible. They're probably the easiest product to put out. They don't have the same freedom of the underwriting or preferential terms because they are unsecured. They're an unsecured lending product. However, if they can be reliant on a government subsidy, such as the CMHC's Canada Greener Home Loans Program, or perhaps even through a loss reserve that would be offered by a provincial or municipal government, they can actually absorb some of that risk and offer preferential terms, but they do rely then on government support to make that happen. As far as their ability to be scaled, they're offered by financial institutions that are present in most markets. So again, lots of opportunity to leverage the industry that's already there. But they are also not a well recognized product. And there's currently a big push on the behalf of the financial institutions to offer this in many markets, or to expand these products that are currently not used to a great deal. So, overall, that gives the sort of, the beneficial and also some of the barriers to each of the products. And I think, the selection, if they're for local governments, or not-for-profits, or other groups who are interested, or financial institutions who are interested in promoting these products and financing new construction, really is a question of understanding what are the key limitations in the market, and how do these benefits or advantages and disadvantages of each product, how do they map to the priorities of the delivery program administrator, and also what are the key challenges faced within that local market that you're trying to address.
Thanks very much, Alex, for taking us through all of that. I've just got one slide left on potential paths forward. So this is my opportunity to prompt people for questions in the chat. So we can spend the rest of the time, once I'm done taking you through the potential paths forward and next steps, just 2 slides each, and then get into a bit of a discussion here. So in terms of potential next steps, these really build on what Alex was talking about in terms of both opportunities and challenges with each of these items. When we talk to our stakeholders, again, that was municipalities, home builders, and financial institutions. Certainly the property assess clean energy, the PACE, and the green mortgages came above the personal loans as of interest. But there was a bit of a mixed reaction when it came to the 2 of them, in terms of which one would be the one to potentially move forward ahead of others. And the feeling was, with both PACE and green mortgages, that either of these could be successful given the right supports and the right structure to it. And so what we wanted to focus on with the rest of the presentation and with the report that we're working on is, well, how could each of these be moved forward? Because under the right conditions, they could be successful. What are those conditions? What would need to be done in order to expand the use of these two mechanisms, particularly bringing it to new homes. So what I'll go through is I'll go through each one some thoughts on how they could be moved forward. And so I'll start with the PACE financing one. So again, this is very much building on what Alex had talked about with the some of the limitations. So the first limitation that we were thinking about was when it came to insured mortgages and mortgage lender consent that some municipalities require for PACE loans on the retrofit side of things. So certainly in our conversations with CMHC and with financial institutions on this topic, there was an interest in exploring, whether that restriction could be lifted. Again, this is where the data comes in. If there's data that this doesn't introduce a lot of risk for those financial institutions or CMHC, then certainly that helps that conversation. We also recognize that there's maybe ways to mitigate that risk that the PACE or the SEEP programs could do themselves when it comes to a loan loss reserve or another mechanism to make sure that CMHCs and the traditional mortgage lenders aren't seeing a PACE loan as a major risk to their lending as well. So that's number one opportunity that we identified. The next one is, I think Alex, when he was describing the SEEP legislation here in Alberta, had very accurately indicated there's no restriction in it right now in doing this for new construction. It also doesn't explicitly say that you can do it for new construction. And so that uncertainty sometimes, lawyers don't like uncertainty. And so when you go to a municipality and say, well, what do you think about this? If there is any legal concern, then perhaps a legal opinion or just having that legislation or regulation clearly state that it can be used for new construction could overcome that barrier, although we're not sure exactly how big of a barrier this one would be. Third opportunity that we had identified is the opportunity for private lenders to potentially get more involved in what's happening in Alberta when it comes to clean energy improvement programs or the PACE programs that are happening. Currently, the legislation does limit the role of private lenders within the SEEP programs. It does need to be the municipality that's lending the money within the current SEEP legislation in Alberta. I know that's not necessarily the case in other provinces and certainly isn't the case when it comes to the original PACE programs that have originated out of the US, which are driven on the commercial side primarily by private lenders. And so, whether there's any opportunity to increase the role of private lenders to both create some administrative efficiencies or more activity from the private sector in promoting and helping to sell PACE type financing is one of the ideas that we had identified through the work. When it came to the green mortgages side of things, certainly we do see an example already in the marketplace when it comes to longer amortizations. That currently is limited to non-insured mortgages. So, addressing mortgage lending rules, particularly with respect to CMHC, when it comes to increasing the eligibility of those longer amortizations for insured homes that are high efficiency, could be one of those opportunities to increase, what existing offerings are out there. And certainly the existing offering is just one financial institution at this point. And so seeing opportunities for others to take on longer amortizations or preferential lending terms, certainly that's something that needs to probably grow in order for green mortgages to really make a dent in increasing the uptake of high efficiency new construction through financing like this. When it comes to green mortgages and financial institutions, we also recognize the value there is in having those financial institutions value the energy savings and the reduction in utility bills that come with high efficiency new construction. We did hear about some examples where that happens, but I don't know if your experience is the same as mine, but when I went to get my last mortgage, it certainly wasn't a big topic of conversation in terms of what are your energy bills and what is the opportunity for a high efficiency property to lower that cost so that we can increase the amount of mortgage room available. So increasing the frequency and the accuracy in which those energy savings are valued would be another area that we have identified that could, help increase the use of green mortgages in the marketplace. And then one of the things that we had heard from financial institutions is there is an interest in taking things like a green mortgage product and then securitizing that and selling it into a secondary market that's looking for socially responsible investments. What we heard was right now the volume of green mortgages wouldn't be high enough to be able to do a product like specific to that. But is there an opportunity to help to create some of those economies of scale and develop that secondary market further? Is really what we had identified within the third bullet point there on green mortgages. And then the last section here isn't specific to any of the financing options, but certainly as we were going through the project, there were things that we heard about that could apply to just about any approach you want to take when it comes to not just financing for efficiency upgrades, but some of these principles that apply to even if you do an incentive program. So certainly design principles around being consistency and simplicity within the way in which the financing is applied is important. Streamlined and it fits with the existing, buying process is going to be really important. Access to financing for all homeowners. So we did hear about, some of these might be limited to those that are non-insured mortgages. So, if financing products is going to be making a really big impact, as Alex had talked about, a third of the marketplace not being able to access it would certainly be a detriment to being able to impact the market and the amount of interest there is in high efficiency for new construction. Marketing, super important. As we talked about, there is some opportunities in the marketplace right now. The CMHC rebates for high efficiency construction is a good example where I think what we heard was we feel some people feel as though it's been underutilized within the marketplace. And so how clear and compelling is the messaging? How visible is it? And how easy is it to one of the points above to access? I think there's some lessons learned from some of the existing initiatives that could be brought into the design of anything new. And then when it comes to any sort of financing product, we know that the financing product by itself is not going to be able to impact those home buyers unless those that are interacting with those home buyers are also promoting it and talking about it. And those are the home builders and the financial institutions that they're working with in their process to be able to get them financing for their new home purchase. So just some general design principles that we wanted to collect and share as we went through the project. All right, my final slide, and then we're going to get into some questions and some discussion. So I mentioned at the start that you weren't going to get any silver bullets when it came to the results of this this research. When we look at what has come out of it, we see opportunities, but we also see some challenges. And in order to really have a material and noticeable impact on the uptake of energy efficiency upgrades in new construction and using a financing mechanism to do that, we certainly do need to have something built that can get to some economies of scale. And building anything that has scale requires time and effort and people and resources and commitment to be able to take that forward. And so certainly if you're interested in this area and you see opportunities that you would like to contribute to and be involved in and help to move this forward, please do get in touch with us. Because right now at this point, we have kind of done what we said we were going to do with this project into our funders. We're going to investigate it. I think we've got a lot of great learnings. We've got a base of information that could be built upon, but we're certainly nowhere near a place where we could say, okay, you do X, Y, and Z, and you get to a new financing product, and the world is, changed. The market has changed because of it. So in order for that to happen, we do really need to see interest from stakeholders to be able to, build what comes next. So we'd be happy to hear from you and continue a conversation if that's of interest to you. So that's all we had for you today in presenting, but would be great to hear if there's any questions that have come up in the chat, and we can start a bit of a conversation around this. Jasmine, is there anything that's come in that you wanted to highlight for us?
No, I'd encourage folks to just plop any questions that come up in the chat. There's been quite a bit of interesting conversation and ideas floated by folks, including Glenn Cheatham, who mentions that some BC communities are looking into adapting what they call a revitalization tax exemption. And that would be specifically for existing homes to promote higher energy efficiency, I presume through retrofit. So it would be interesting to see if that mechanism could be applied to new construction in the future.
I could respond to that, Jasmine. So, yeah, tax exemptions are a really interesting way that municipalities can promote higher efficiency renovations or even new construction. What it does is it reduces the, so when you do a renovation, often the municipality will raise your tax bill as a result of the higher value of your property afterwards. What it says is that if you've done that renovation for the purposes of energy efficiency or improved energy performance, they won't raise your tax for that portion of it. So it reduces the burden on the homeowner, which makes it more affordable, but doesn't actually finance the cost of conducting those. You still have to go and get additional financing to conduct the improvements themselves. But I think it's a wonderful mechanism, and I think it should be applied for both new construction and for renovations to reduce the financial barrier to getting it done, which is, look, I just invested all this money on a high performance new home or renovation, and now I'm paying higher municipal taxes as a result of it. It seems like it's sort of mismatched priorities and policies. So I'm a huge fan of tax exemptions at the property tax exemptions on these costs.
Well, we certainly saw a lot of inspiration in things that are happening on the retrofit side as things that potentially can be ported over to new construction, because there's a lot more happening on the retrofit right now. So I think it's a good point to raise.
In addition, I'll try paraphrasing here. Russ mentioned that there are some trade-offs in targeting home builders versus homeowners. So one other approach, rather than target each individual homeowner, which can be quite a bit of work, it might be interesting to target builders and contractors, which is something that, having spoken with one financial institution through this study in particular, mentioned that is their approach. They do build relationships with home builders for those very efficiencies.
And again, I think it's part of the equation, right? You're still left with the challenge of the incremental costs have to be paid by the homeowner. So you do need a way to expand the homeowner's access to capital if they are capital limited. Not everybody is, but the vast majority are. So if you're going to finance through the home builder, you need a mechanism either for the home builder then to be able to access some portion of the energy savings to then repay that additional financing that they put in place, or alternatively, you use something like you get maybe a zoning variance or something like this to encourage the home builder to build these homes, and you couple it with a financial product that enables the homeowner to then be able to purchase that. And then you kind of have a win-win, because you do need a mechanism, absolutely, that encourages the home builders, like, not just to build these on a one-off custom basis, but actually, if they're developing a neighborhood like the one behind me here, to actually make it be all the homes in this neighborhood are tier 4 or tier 5 of the building code. And they get a benefit which allows them to offer it more affordably. And at the same time, there's also a mechanism that allows this to become accessible to almost any of the home purchasers, because it recognizes the additional value that home has for the standard home.
I see, Glenn, you had your hand raised. Do you want to respond? I'll unmute you.
Yeah, sure. Thank you. I just actually typed it out on what I was going to say is that it's an interesting conundrum, because with the RTEs in our research of it here in Kamloops, one of the things is that the RTEs sort of assume that with a conventional improvement, say to the facade or beautification, that there is a logic or rational increase in property value as a result, which that creates that tax break between the two. However, it's not clear whether that happens with these types of efficiency improvements that are maybe less visible. But I think it does fundamentally speak to that value proposition of high performance and the consumer demand piece. And so perhaps that's I don't have a solution here, but I think it does. It's a symptom that we don't necessarily or the systems we use to assign value to our properties and our land and our buildings may not necessarily take that into consideration effectively at the moment.
If I can respond to that one too, Glenn, I think, again, really great example. So I have a couple of thoughts on that. First, if you're looking for evidence of how efficiency improvements in existing homes translate into home value, Pace Nation in the US has done some, a few years back, some pretty extensive studies on how Pace investments led to changed property values. And actually, I believe, I haven't read them in a while, but I believe that the conclusion was that the increase in the property value actually exceeded the investment and also the value of the Pace lien. So they actually created room in the resale value to clear off the Pace lien if they chose to at that moment. But if you're looking for examples which show how, like, actual home values correlated against investments made through Pace financing, they do have some literature on that. But you are highlighting, I think, the key challenge that related to all efficiency investments is how do they get valued, and that there are many places and ways that they need to be recognized and valued. And so I think this is fundamental as to why we don't see a lot of green mortgages out there, is because the financial institution itself is not equipped necessarily to value the quality investment or the energy savings in its overall financial assessment of that property. It's not in their standard recipe for doing that. And so how without enough of a track record or enough data on the performance of those loans, how do you convert, you know, the investment to a change in value, to preferential terms, to higher amortization, things like that? It's a real challenge. But it's also, so it's not just a question of the resale value, it's also a question about how the financial institutions themselves actually see the value of these homes relative to the neighboring home, which looks exactly the same, has the same number of bedrooms, it's in the same community, has the same marble countertop, but costs 10 or 15% less. And it's, well, why would our evaluators value this home at 15% more than that? And that they're not always equipped to carry out that analysis. It really does hamstring the green mortgage market.
Am I still unmuted?
Yep.
Yes.
Sorry. No, yeah, and I just really appreciate that summary. And I do think this is, I mean, when we fundamentally we need to start valuing these you know, these efficiency and performance over other values like aesthetic and you know, creature comforts, and that's a tough thing to change in a society. But yeah, I was curious, like one of the things that we're looking at here is you know, through building benchmarking and home energy labeling as one. Again, none of these are the silver bullet, it's silver buckshot, but you know, if you can start to make that more visible. So when you're looking at, and this is happening in BC now, where you have homes that appear identical, you know, but one might be a step 4, the other might be a step 2 or none. And there's not, unlike a car, there's no label on the window necessarily. We have introduced that as an administrative requirement as a municipality that builders need to submit with the you know, as built compliance forms and so on, an EnerGuide label that we now scan and upload, include with our municipal property information report. You know, and what we hope is that the real estate agencies and stuff, you know, I don't know about Alberta, but they are starting to include like walkability scores and other metrics like that. And I think, again, do they play a role in helping to bring more attention to the efficiency value of that house?
Glenn, you're speaking our language here. That's we also do a lot of work on the building energy labeling and home energy reporting and disclosure, and absolutely, you know, would echo your, you know, what you said there. And when we've done financing program designs for municipalities across Canada, one of the first things we say is the financing loan's not going to get the job done. You need a whole ecosystem of strategies here, right? So if you're just doing the financing, but you don't have a way to value and make visible the energy performance, then sure, you'll get some of it done, but you'll get more done if you can put these two together, and they'll reinforce each other. So really great to hear that you're thinking of it from all these angles in your municipality. It's absolutely consistent with our thinking, and then you bring in step code of evolution, you bring in renovation codes, you bring in incentives for some of these things, you bring in making it public, put that all together, you start to get entire market transformation. You're not just talking about one piece of the puzzle, you're talking about getting a whole cohesive strategy. I think it's wonderful.
Yeah, I wanted to come back to the silver buckshot comment, because I totally agree with you. It's not one thing, and it's lots of different things. But I want to tie that to the comments that were made earlier of, oh, could home builders just go ahead and kind of do this? The financing would focus on them, or Alex had mentioned, why aren't financial institutions having more of these types of products? And what I heard when we were talking to those stakeholders during this research is, I mean, home builders can build these homes. Financing institutions, we'd be more than happy to have a product to attract those home buyers that want that green mortgage. But the consumer demand is the thing that holds them back. If consumers came to them in droves and said, "Yeah, I want this high efficiency home," they would build them. If they came to them in droves and said, "I want this green mortgage," they would create mortgage products. But right now, what they're seeing is they'll create a mortgage product, and we heard an example on the retrofit side where it didn't really have a whole lot of uptake. And so as a financial institution, how much time and energy are you going to put into a product that isn't seeing a whole lot of volume? And so when I come back to the silver buckshot, I do think one of the things is that we've been trying to address through this project is, how do you create that consumer demand to enable these other system actors that are very big, very sophisticated, and can react to this, to enable them to do some of those things that they can do. It's almost like a systems map. And so I was focused in particularly on, how do you enable that consumer demand? And I think I've come back to the conclusion that, well, enabling that consumer demand does require multiple things, and the valuation conversation that just happened is a good one, but I do think it needs to go beyond that. And I continue to come back to, well, in other areas, and not just homes, but even in the industrial sector, when we're trying to spur something new, spur some sort of action in the marketplace, we do come back to, well, how can we catalyze that? How can we ramp that up? How can we support it in the early days so that it can grow to an economies of scale, that it can then take on a life of its own? It's now in a place where the market is reacting, whether it's home builders or financial institutions. And so the point earlier that the stakeholders gave to us, which is, is there a role for provincial or federal governments, or in our work in Alberta right now, we're trying to get, even just energy efficiency or demand side management programs through the utility system. Is there a role for one of those groups to be able to make some initial investment to help build some economies of scale, so that this can grow to a place where the market actors will take it and run with it, and make it into a very large scale thing? But who's going to make that initial investment? Everybody's looking at each other and saying, is it you? Is it you? Is it you? Well, I'm not really in a position. Well, sometimes there's someone that just needs to jump in and say, no, I'm going to spur this marketplace in this way.
Yeah, I was going to say, I don't know. I mean, one of those tools, I think, is, I mean, because obviously home consumers, there are some limits. They might want an indoor pool, an elevator. There's somehow or another they have to arrive at a point where they have to accept that that's what they can afford. The challenge I have right now is, like, they can't opt out of the life safety components of the building code, like that they have to build around those cores. So if their budget allows granite counters in addition to life safety, then they can include that. Challenge is that the efficiency or the emissions component, the pollution component, is not part of that core. And I mean, and that's where the R word, which I know in this audience could be an interesting one, but the regulatory piece, I really think could be that catalyst, and has to be, I believe, part of it. And the building codes and so on are intending to nudge people that way. And it would be nice if there could be some kind of you know, a synergy between the financial institutions and lenders and those regulators in terms of like allowing for some, I guess, enticing consumers to be able to accept that the efficiency component is actually should be considered like with the life safety, and that some of the other, the size, the trim, the other, you know, the other stuff could, you know, may have to be secondary to those priorities, but I'll leave it at that.
Yeah. No, and certainly the regulatory side of it is part of that silver buckshot, right? And we were thinking of the financing piece as helping to generate some market demand that can actually support the transition of, you know, different levels in the building code, because we see them as being complementary and not, you know, one versus the other. But I appreciate all of your input and your questions and your comments, Glenn. I didn't see tons of other questions in the chat, which is fine. I think probably have a group that's digesting what they've heard. I do see we're at time. So I'm going to wrap us up with a few closing comments, and then yeah, I would encourage you to reach out to Jasmine or myself if there's more interest in conversation on this topic. It's the only way more work is going to happen is if we, you know, see that interest in critical mass in having people participate in it and contribute it to be able to move something forward. Because in my experience, I've been doing this type of work for about 25 years right now. You know, it takes some heavy lifting to move some big things forward, and that's what we're trying to do. We're trying to move some big things forward. So we do need to see that critical mass in order to be successful in terms of the stakeholder involvement and support. But with that, I'd like to thank my panelists, Alex and Jasmine, who's not only been moderating the discussion, but also was an instrumental part, and her co-conspirator over there, Felix, who's not, I think he's on parental leave right now, so wasn't able to join us. But that was the team that really helped to pull all this together. So thank you to Jasmine and Felix for that, and for Alex for joining us today. And thank you to all the attendees. I really appreciate your time and attention. I know everyone's busy these days, but it's great to be able to take some time and have this conversation. And please do reach out. We'd love to hear from you. All right. Thanks again. Have yourself a good day.